Record on this computer. Hi team, it's Matt here from the Cafe Doctor. I hope you're looking after yourselves and each other and doing the right thing and staying inside during this lockdown. What I've got for you tonight is a little tool that I've been spending about a week developing, and I want to show you a cash flow forecast and explain to you what it can do for understanding what your business is going to be doing in the next 3 months. So one of the great unknowns that as business owners we actually have is what's going to happen. And I'd love to say I've got an answer for that, but I don't even think the Prime Minister of any country, or the President even, has got an answer to that question. But what we can do is we can control what goes on, even though there might be not a lot in our business. And I'm going to give you a tool for free. Not even going to ask you for your email or to sign up for anything. This is just, I want to give you this tool because it's a really powerful tool that you can use in your business. It's going to be part of a program that we're putting together at the moment for cafe and restaurant owners called The Fix. And The Fix is our response to the COVID-19 pandemic. So I was literally days away from launching the $1 Million Cafe program. Now you're going to get the $1 Million Cafe program as part of The Fix. It's all going to be bundled in together because it's still the tools that you need to actually grow your business and take your business forward. But we're putting together a whole bunch of tools and things for business owners of cafes and restaurants to actually use to get their business back to where it was as much as we possibly can, and whatever this new world actually looks like. One of the tools that I'm going to give you in the program, I'm going to give you for nothing tonight. I'm not going to ask for your email or anything. I'm just going to show you this amazing cash flow spreadsheet, and we're going to go through that, and I'm going to show you how it works. So as part of this, I'm going to give you the file. Now you can, it's going to be a Microsoft Excel file, but you can put it onto Google Sheets. So it depends on what you prefer. You can use it on Google Sheets. You can use it on Numbers, which is the Mac version of Excel. So all the formulas copy across quite well. If you get any problems, then please feel free to flick me an email. It's matt@thecafedoctor.com. So this was initially taken from another cash flow forecast spreadsheet that was out there from a big accounting firm, and it didn't have any relevance to a cafe or restaurant owner. So what we've done is we've tweaked this so it absolutely works for you as a cafe restaurant owner. And this will help you understand what your cash burn, if any at all, is going to be like over the next 3 months. If you go looking for cash from the bank, they are all probably going to want this type of document and this sort of forecast. So this is to help you get finance. It's for you to help understand what your business is going to be doing in the next 3 months. So we've started it as of Sunday. So this is all the week ending the 5th of April, all the way up to the 28th of June. So it takes us right up to the middle of the year. And what we've done is we look at this every single week, the week ending on Sunday, because that's the most common period of time that the people that I deal with actually use. So they go from a Monday to a Sunday, and they call that the week. So the cash flow forecast, what we do is we put in some revenue numbers, and then we work out our food cost from that. We take away some expenses, and we're left with some cash for paying tax and paying leases, so finance costs and that sort of thing. But ultimately, we have a big pot that we start the month of, and that pot of cash is what you have in the bank. And let's just say, for argument's sake, because we're going to work through an example here, let's just say we have $2,000 in the bank. So our opening bank balance is $2,000. This is the only time you'll have to enter that number. And then let's just say that we are only expecting $100 worth of sales receipts in from the week ending the 5th of April. Now, I'm putting a number in here. It might be 0. That might be more accurate, but we're putting in a number here so you can see the spreadsheet come alive, okay? So putting $100 here, it's just a nominal figure. What we do is we've also put in our food cost estimate. So this is what your normal food cost will be. And we've just put a number in there at 30. It could be 25, it could be 28, it could be 35. Just put whatever your normal previous food cost would be. So we've put it at 30. And once we actually enter this number in here in our sales receipts, we press go, bang, you'll see the spreadsheet start to come alive. So we've got total revenue of $100. We've got our food cost, which cost us 30. That leaves us $70 to pay our expenses. And the term that we most often use for that is our gross profit. So our gross profit for that week was $70, but really what it is saying, okay, we have variable costs which go up with food. The more we sell, the more it costs. And so we're going to call that, for the purposes of this exercise, gross profit. And then we have other expenses that we go in, and I'm just going to put in some nominal numbers here so we can actually just have some things come to life on our sheet. So let's just say we pay rent. We'll pay that next week. Heating and power. So let's just say we pay $400 for heating and power. We got fuel for the car, so we put $40 for the car. We paid some subcontractors, $200. We paid $500 in wages because we got a subsidy on our wages, which left us with total operating expenses of $1,240. Unfortunately, that $1,240 was only counted by $100 worth of revenue. So we've obviously burnt through some cash, but that's possibly not the only cash we've burnt through. So we've got some sales tax. We may have to make some payments, because don't forget, this is a cash flow forecast. This looks at the cash flows in and out of the business, and any tax we've got to pay, income tax for previous periods or whatever. So we've got a net cash here at the end of all this of $1,170. So that's in red. So that's not a good $1,170. That's a bad $1,170. And it gets worse, unfortunately. We've got equipment. So we're going to have to lease some stuff. So we're going to put $110 into that. And we're going to have a bank loan. Let's just say we paid $200 this week out of that bank loan. So we've got net cash flows from financing. We had to pay out $310 for that. And our net cash flow from operating, so actually running the business, well, not as it happens, is $1,170. So that adds up to $480 as our net cash flow. $1,480 out of our $2,000 leaves us with a closing cash balance of $520, which is what we started with, less what it cost as far as the expenses that came out of our account. That leaves us with that. And we take that closing cash balance and it automatically generates over here as our opening cash balance for the next week. Now we'll just scroll down here a bit and you can start seeing these graphs starting to appear. So this is the closing cash balance. So we know that we've got $520 in our bank, which is positive, but we had some big expenses last week. So that's what that's going to be like. So let's go fill in this next week, and let's just say we put in $200. We sell some more stuff. I'm not sure where we'll do that at the moment, but let's just put in there because it's a number. We're not going to spend any more on advertising, but we're going to spend some on rent. In fact, we're going to change that to $50 in rent because we're getting rent abatement, which is quite happy. We still need to spend another $40 on fuel. And we've got some other expenses of $200 for there. And so we do that. So our expenses this week actually went down quite nicely because actually, I'm going to pay some wages. So we're going to pay some wages. That's $500. So we were $790 were our expenses, our operating costs for the week, plus obviously $60 for the food. That left us $650 in the red from operating this week. Now, bear in mind that we're only in the red because we're not getting any income. And I'll show you a bit later on what happens when we start getting some decent incomes. So obviously this week we started off with $520. We took $650 off that, which means that we're $120 in the red. So what these numbers actually do here is they actually tell us the net cash flows is what our cash burn is every week. So how much our bank accounts will actually decrease by every week during this time. But let's go forward a bit. Let's take it up to May. And let's go the first week of May. And let's just say I'm going to pick a number here. Please feel free to pick any number you feel like. And we're going to sell $6,000 worth of product, which is great. That's our first week back trading. We sell $6,000. Our food cost of that was at 30%, as we know, and that was $1,800. So that left us with $4,200 to put towards expenses and that sort of thing. So advertising, we're going to do some advertising that day, that week. So we put $150 into advertising. We had to pay some rent. So we paid, let's just say $250 in rent because we had to pay some. Heating and power, yep, we're up and running. So we're going to pay $120. No, we'll have to, actually the cash won't come out that week. But let's just say we paid the month there. We sort of paid $300 for the month. It was a quiet month. Now, feel free down here, by the way, to put other expenses. You don't need to put food in, but you can put other expenses. So anything else that's down there, you can just put in a different line and start filling in numbers, and they will all auto-fill. So we've got 500. So let's just say our first week back, we've got $2,000 worth of wages because that just went up, right? So our total operating cost on this particular week, $2,700. So our net cash flow from operating is $1,500 in the black. Finally, we're in the black. Good news, people. But we're going to pay some equipment leasing, of course, because we can't forget those buggers. And we're going to pay another $200 to our bank because you can't get by the bank. So that left us, we started the week, $130 in the red, but our net cash flow was $1,190, which left us with $1,060 in our bank balance. Does that make sense? I hope that makes sense. So what the way to work this is firstly to pick a opening bank balance, pick what you think your food cost will be, okay? And then start putting in your revenue numbers. So it might go 100, 200, 200, 200. And it might go, for example, 7,000 the second week, 8,000 as we build our customer base back up. And use some of the tools in the $1 Million Cafe program, hint, hint. And we're going to go up, bang, by $1,000 a week, up to the end. So let's just say it looks like that. Now, bear in mind, this is a hypothetical situation that I'm creating. I'd like you to have a really good think. Oh, we got $100,000 in there. We might just make that 10,000, shall we? It's a hypothetical situation, but it's going to be real for you. These need to be as close to real as possible so we can understand what the impact as far as our opening and closing bank balances are and our net cash flows look like, okay? So the food cost is all self-generated. You'll need to put in the numbers for all of these other expenses down here. Now, bear in mind that these are cash expenses, so they actually come out of your bank accounts. If they don't come out of your bank accounts, it doesn't need to go in the cash flow forecast. Now, what we do is we do a couple of things here, is we go through each and every one of these lines down here, and we go, what could we reduce back to zero? Because every one in here, whilst we're getting very small incomes, it's extraordinarily painful. And then we go down to the financing costs. So this is the equipment leasing, vehicle loans, bank loans, anything else here. Now we go into those and we go, right, can we put any of those on holiday? Can we get some holidays going as far as equipment, bank loans, all that type of thing? Now bear in mind there are pluses and minuses with that, but we want to make sure that we're not bleeding too much money because, but believe me, the bank on your bank accounts, when you're asking for an overdraft, you know as well as I do what banks are like. They're not particularly friendly people, and they will make money out of our misery. So let's just do this exercise, go through, put in your revenues, put in your expenses, and see what it comes out like. Don't be afraid to tweak them over time as you get a better handle on what things are going to be doing in your business. But this is the first of the tools that will allow you to gain back control over your business. You need to understand what your cash burn is going to be like. And in the short term, I can imagine it'll be quite high, but it will come back at some point. So again, this is customized for cafes and restaurants. It's going to be part of the fix. and the fix will be coming out within the week, basically. You're going to get the $1 Million Cafe program, all 9 modules and all the bonuses and that sort of thing. We're also going to give you some tools like this one that will help you get your business back on track, and it'll be the lifeboat that we're looking for. So if that interests you, flick me an email at matt@thecafedoctor.com, or check out this channel, the same channel that you found this on. There'll be more information coming up, and I look forward to seeing you soon. If you've got any questions, flick me an email and I'll get back to you straight away, or one of my team will. All right, talk to you soon.